Hey guys, Mike here. Hope all of you are doing well. Happy Friday. Yes, it is my birthday today, but I wanted to shoot a quick video regarding the stock market and what's happening this week and give you guys some financial education and my thoughts on sort of what the key takeaways are from this week. Before I get started, I'd really appreciate your support. So if you guys can please share this on your Facebook pages. I'm trying to get over 100 likes and followers on my page to just spread what I'm doing. And if you guys can please help support me, if you can share this on your pages, really appreciate your support. Again, my website is www.thefinancialmechanic.com. I've got workshops on there that I do every couple months. So if you're interested in what I'm doing, please share, please like, appreciate your support. All right, let's get into it. So this week we've had some interesting things happen in the stock market. So summarizing what happened, I look at the Dow Jones in terms of looking at what has sort of happened in the marketplace. You can look at any sort of index or any sort of stock performance indicator, but I look at the Dow Jones. And the Dow Jones has basically fallen about 10% this week, which is huge. If you look at 10% fall in the Dow Jones, that's billions and billions of dollars that of monies that has been effectively lost on the stock market this week alone. You can look at pension funds, individual RRSPs, IRAs, 401ks, everything. So anyone that had any sort of position in stocks has had some type of loss this week, and it's something that we should be talking about. So first of all, why is this happening? So the biggest reason why this is happening, of course, as many of you are aware, is regarding the uncertainties with the coronavirus, and that is not 100% the reason, but it's a significant reason. So there's a lot of uncertainties in the marketplace, and that is causing a downward pressure. So I want to sort of summarize why market corrections happen and why recessions happen. So the biggest thing I tell people is the number one thing that keeps financial markets afloat is one thing, and it's very simple. It's confidence. If there's a loss of confidence in the marketplace, there is always going to be some type of downward pressure with prices going down. It's very simple to understand. We have a buyer and a seller to every single transaction, right? The more sellers we have, of course, that pushes prices down. The more buyers we have, that of course, that pushes prices up. So again, it depends on what confidence side we're looking at. So as confidence increases, saying, hey, investors are looking at companies saying, hey, I see that this is a great opportunity, buy, 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 buy. And when that happens, prices will go up. Same thing with the banks and other financial institutions. Hey, this looks like a great company to lend to. This individual looks like they can pay me back. Boom, boom, boom. So they lend money out. So again, really the confidence really drives the entire marketplace, not just stocks, but real estate, other asset classes, pretty much everything. In my opinion, it all comes down to confidence. So what can cause market corrections and ultimately a recession? So one thing to sort of couple this with the confidence piece is a loss of uncertainty. So the biggest thing is if there's a loss of confidence, then there's uncertainty in the marketplace, and that can certainly cause volatility. And that's exactly what you're seeing now is that people are sort of scared and they don't know what to expect with the coronavirus and sort of what will terminate and what will result from that. And because of that, you're seeing the marketplaces reflect. So one of the things that can cause recessions and corrections is confidence and really uncertainties. Another thing that can cause recessions and market corrections is social and political landscapes across the board. So geopolitical factors. So who's in government? What's the political landscape like, right? People react to those types of things, right? Social protests, social uproar, right? Again, are people going to the streets? Are they upset about something? What's happening? That can cause market corrections. As absolutely it can. Another thing that really people don't talk a lot about enough is that can cause a correction or recession is monetary policy. So, one thing I talk a lot about is interest rate manipulation and how the government uses that as a tool to sort of stimulate growth and onward. So, again, what I said earlier in my previous videos is as interest rates rise, that puts pressure on the marketplace because now the cost of debt is more. So, that in itself, monetary policy can cause a recession or correction. And like I said a couple of years ago, the Bank of Canada tried raising interest rates, but they just couldn't because the default rates were increasing. The marketplace just wasn't ready. So that can also cause a correction or a recession. So really, according to Google, what's commonly sort of accepted as a recession definition is 2 quarters of negative GDP growth, which means there's really no economic growth in the economy. Again, that in itself is up to speculation. I tell this to people all the time that, how do governments calculate GDP growth, unemployment rates, and stuff like that? Again, they use inputs and assumptions, and all of that is up to questioning because, statistics are as good as what the underlying numbers tell you. So again, those are the things that can cause corrections and recessions. I did a video a couple months ago talking about, try really sort of warning people to say, hey, take a second look at your portfolios to see if there's a place to sort of reallocate monies away from equities, so stocks, just because I sort of see that in the next year or two, there might be some volatility in the marketplace. So I shot that a couple months ago. And, the coronavirus was something that wasn't really an issue at that time. And it was something that I was absolutely not referring to in terms of what would happen. But I think the issues are much bigger than this. So what you're seeing this week is, in my opinion, just sort of the tip of the iceberg, in the sense that, you're seeing some uncertainties regarding the coronavirus, but this really isn't addressing the bigger problem. So what is the bigger problem? Because some of you told me, said, Mike, can you explain exactly what, some of those things you talked about in that stock market video about what red flags do you see? So the big one that I tell people is debt. We have a debt problem, and it really drives across the board. So starting at the government level, the debt to GDP ratios on a global scale are not good. What do I mean by that? So if you look at debt to GDP ratios for Canada, over 100%, you got more debt than GDP growth in Canada. US also trending upwards. Japan also trending upwards. If you actually look at the debt to GDP ratios for many of the big economic countries, they are not good. And what does that mean is government is spending money, and we have a lot of debt, and really think about it. If governments are piling on all this debt, you really do need growth in the economy to help pay for that through tax revenue, through really economic growth, employment opportunities, decreasing unemployment rates, and on and on and on. So, sure, debt is great, for a government. So they're investing money into infrastructure and other programs. That's wonderful. But, somehow that debt needs to be paid for and serviced. So the government has a big debt problem, and that comes across the entire, many countries across the planet have this problem. You can go on Google and type in debt to GDP ratio for any country, and you can see the scary part is that it's trending upwards. Okay, the fact that it's over 100% in many countries is one problem, but the second problem that's even to really pay close attention to is that they're all trending upwards, and that is not a good thing because GDP or economic growth is just not there. But debt keeps going up, so obviously that's a problem. Then another thing is personal debt. So personal and consumer debt is at an all-time high. You have individuals have sort of maxed out on credit cards, lines of credits. We've got automobile debt, tuition debt, like just all types of different personal and consumer debt is at an all-time high. Debt at the corporate level is also at an all-time high. The corporate debt levels are also high because of the lower interest rates that have sort of been in place the last 10 years. So corporations have sort of piled on a bunch of debt. So of course, interest rates, in my opinion, can't rise quickly and probably won't because there's just too much debt in the marketplace. And as interest rates rise, the cost of debt goes up. So I think we have a debt bubble, and that's simply what's happening is you have government, personal, and corporate debt at all-time highs. Another thing to look at is real estate. So stock markets at all-time highs. I say this to people all the time is, don't be surprised that in 1 week that the stock markets fell 10%. Everyone's like, oh my goodness, everything's fallen 10%, and yes, it is tragic. Like billions of dollars have been lost on the stock market in 1 week alone this week. But don't forget that since 2008, people don't talk about this, since 2008, 2009, according to the Dow Jones, since the lowest point 10, 11, 12 years ago, the markets have gone up over 400%. So you've had such an economic expansion. So at some point that needs to sort of correct. Why? Because unless you have good GDP growth and all the other sort of factors line up to suggest that prices should continuously rise, you're going to have some type of market correction. And that's what I was alluding to in my December video. So you basically have kind of what Mike Maloney and others coin as an everything bubble. Real estate, stocks, a lot of different asset classes are sort of at a point where they've seen so much growth, and now it's kind of like, okay, well, do we have the economic growth in countries to support that growth? Yes or no? So, again, this isn't to scare anybody. These things are normal. These things are they happen. These market corrections and market recessions happen. In cycles. Again, what's happening with the coronavirus, I think, is just simply uncertainties regarding to that. I don't think that's addressing the big problem of what is happening on a global scale. Then you could talk about geopolitical factors and stuff like that on top of all of the other issues I just mentioned. So I think there's a bigger problem. This is just sort of the reactions to the coronavirus. So, what can people do, I guess, is, again, if you are in equities and shares, take a second look. Again, I don't provide any investment advice. What I will do is give you some thoughts and some asset classes you can take a look into and do your own financial education. Talk to your financial planners, talk to your brokers, and see what their thoughts are. But obviously stocks, in my opinion, are at an all-time high. So everything really outside of that, there really isn't too much options of things that do well in market corrections. But you can look at government bonds, do some education into those precious metals markets. Real estate generally does well. So cash, fixed income, GICs, those things are also things you can look into. So again, don't think that stocks are the end all be all. There's other options. So just, get financially educated, find out what the options are, and really ultimately just prepare you and your family for any sort of market shift. So anyway, if you found this helpful, I'd really appreciate your support. If you guys can share this to your Facebook pages. I'm trying to grow my page and my following. So appreciate your help with that. So again, if you have any questions, any comments, anything I said that you disagree with or agree with, let me know. If you have any other things that you would like me to talk about, also let me know. Otherwise, happy Friday. Have a great weekend. We'll talk to you soon.